Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHABAIDAO Industrial Co. Limited Annual Report. CHABAIDAO Industrial Co. Limited is a diversified company that offers a wide range of services and products in the People's Republic of China. At its core, the company provides tea drink products under the CHAPAIDAO brand name through both self-operated and franchise stores. In addition to product sales, CHABAIDAO Industrial Co. Limited is also involved in various business activities that support its operations. These include supply chain management, franchise management, marketing campaigns, and operation activities. The company has also ventured into the production of biodegradable straws and packaging, highlighting its commitment to sustainability. Furthermore, CHABAIDAO Industrial Co. Limited offers IT services and maintenance activities, as well as training programs for its franchisees. To ensure seamless logistics and distribution, the company provides these essential services to support its business operations. Overall, CHABAIDAO Industrial Co. Limited's diverse range of products and services has established it as a significant player in the market. CHABAIDAO Industrial Co. Limited maintains a market capitalization of $9 billion, broadly in line with the industry peer group. CHABAIDAO Industrial Co. Limited trades at a lower price-to-earnings ratio of 9 times and a higher price-to-book ratio of 2.02 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The balance sheet appears very conservative, with liabilities representing only 28% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 6.98%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline can be identified through a review of the key factors that have impacted an organization's financial performance. Revenue growth is primarily driven by several key factors. The sale of goods and equipment has seen a significant increase of 10.1%, while other revenue has experienced a substantial rise of 58.3%. The expansion of enrolled franchise stores, with an additional 1,159 new locations in 2024 and 1,477 in 2023, has also contributed to growth. Furthermore, the introduction of new products, including 117 tea beverages and 17 coffee products, has helped boost revenue. Additionally, improvements in cost control, warehouse logistics management, and a rise in trade receivables have all played a role. On the other hand, revenue decline is primarily attributed to a few key factors. The royalty and franchising segment has seen a decrease of 10.2%, while government grants and bank interest income have also declined. These factors have contributed to a reduction in revenue, highlighting areas where the organization may need to focus on improving performance. Overall, the drivers of revenue growth or decline are multifaceted and influenced by various factors. By understanding these key drivers, organizations can identify opportunities for improvement and make informed decisions to drive future growth. The financial performance of the company has shown significant improvement in terms of net income and profit margins. Initially, the net income increased by 14.3%, indicating a modest growth. However, this trend continued with an even more substantial increase of 71.2% and 71% in subsequent periods. This remarkable growth can be attributed to various factors such as cost-cutting measures, efficient resource allocation, or strategic business decisions. In terms of profit margins, the company has witnessed notable improvements across different categories. The gross profit margin increased by 1.3 percentage points to 32.5%, indicating a significant improvement in pricing power and operational efficiency. Furthermore, the adjusted EBITDA margin rose from 17% to 20%, demonstrating enhanced profitability and reduced expenses. Additionally, the adjusted net profit margin increased from 13.1% to 15.4%, underscoring the company's ability to generate higher returns on sales. These improvements in profit margins are a testament to the company's efforts to optimize its operations and capitalize on market opportunities. Based on the provided information, it is clear that the company is indeed generating positive operating cash flow. This is evident in two key points. Firstly, the company's financial statements explicitly state that it has achieved a positive operating cash flow. Secondly, this positive operating cash flow can be attributed to the fact that the company was mainly funded by cash generated from its operating activities. This indicates that the company's core business operations are generating sufficient cash to cover its expenses and investments, resulting in a surplus of funds available for other uses, such as debt repayment or further investment. Overall, this is a positive sign for the company's financial health and stability. The company's debt level has undergone a notable reduction. As of December 31, 2025, bank borrowings have been completely eliminated, marking a significant milestone in the company's financial management. Additionally, lease liabilities and contract liabilities have also decreased by RMB 1,115 and RMB 43,276 respectively. This decrease in debt levels is a positive indicator for the company's financial health. The elimination of bank borrowings suggests that the company has successfully managed its short-term debts, while the reduction in lease and contract liabilities indicates improved cash flow management. However, it is worth noting that there have been no significant changes or information provided regarding interest expenses, which may be a topic for future attention. Management is optimistic about the company's future, with a clear focus on expansion. They plan to continue growing their overseas business, targeting markets with high consumption potential and brand suitability. This strategic approach aims to increase revenue and establish a strong global presence. In terms of investments, management has stated that there are no significant plans for acquisitions or disposals in the near future. This suggests a cautious approach to growth, prioritizing organic expansion over external deals. However, they do plan to hold equity investments for long-term purposes, recognizing that short-term fluctuations in value may not be relevant. Management is also committed to developing internal talent, with a focus on improving employee promotion policies and career development channels. This initiative aims to motivate employees and drive growth from within the organization. Overall, management strategy emphasizes steady expansion, cautious investment, and internal development, positioning the company for long-term success. There are no notable acquisitions or divestitures to report. The company has maintained a stable portfolio of assets and operations without any significant changes through mergers, acquisitions, or disposals. This suggests that the organization is focused on organic growth and development rather than external expansion or restructuring. As a result, there have been no major adjustments to its business scope or structure. That concludes the financial summary for CHABAIDAO Industrial Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.